Joining us now is former Kansas City Fed President Esther George. Welcome. Esther, before we get to the tariff stuff, I want to ask about this shadow Fed chair concept. So if President Trump names his choice for the next Fed chief early, what are the chances that blunts the influence of Chair Powell and the current Fed's ability to influence investor expectations?
Yeah, well, good afternoon, John. I think it may complicate communications. It may create more confusion at some level. But I think the important point is that as long as the current Fed chair is in his seat, he has expressed his strong commitment that he is going to pay attention to the job that he has, and that committee will focus on how the economy is unfolding relative to its mandate. So a lot of noise around that, but I think the real thing to focus on is how the current incumbent and that committee are going to focus on the job they have.
Well, let's focus as well on the current data. We just got some. And to what extent do you think we should expect any tariff impacts that do show up in the data to show up more toward the back half of the year?
Yeah, I definitely think it is too soon to try to make any call on what impact we're seeing from tariffs. That today's report was a downside surprise, more welcome than, of course, if we had gotten some kind of an upside surprise. But the truth is, these trade negotiations are currently pretty short-lived, and we have more to come. And I think that is going to take a matter of months and not weeks to see. So my own expectation is we should see by fall, hopefully, where these things have gone and where exactly the impact to inflation might fall. So it's too soon, in my view, to be able to really judge that.
Esther, I get that the economy, the U.S. economy is in a pretty good place right now. It allows the Fed to be patient. There's a dual mandate that needs to be fulfilled. The Fed is data dependent. Expectations that you could see some changes to that data here in the coming months. That being said, so many other central banks across the world, whether it's Canada, Australia, ECB last week, we've seen it with Mexico. I could go down the list here, have actually been cutting rates in anticipation that all of these trade dynamics are going to slow their economies. Is there a case to be made for that here in the U.S. as well, then?
Well, I think we're talking about very different economic outcomes across the world right now. And so these countries that are cutting rates have seen, I think, more direct impacts. They have seen a more actual slowing. And the U.S. has come into this in a much stronger position relative to many of those countries. So some of these dynamics could well play out in the United States, but I think we start from a very different position. And that, of course, is going to affect the policy stance that accompanies any change in how the economy is performing right now.
We've got a lot of bullish commentary, or at least I'll say positive, constructive commentary from credit card company CEOs. You've got those stocks actually trading at record highs as well. Is that a positive in the sense that the consumer is holding in there and continuing to spend here in the U.S.? Or is that another shoe that could drop if consumers are racking up charges on credit cards because they're overextending themselves?
Yeah, it is the key question, I think, when we're trying to form an outlook for the economy today. The consumer is everything when it comes to economic activity, and watching consumption is really the area you have to watch. And remember, we're dealing with a consumer that is bifurcated in many ways. The good news is, though, that the unemployment rate suggests to us that people have incomes. And while they may be stressed on the lower end of the income spectrum relative to upper, to the extent that you have income, what you're doing right now is making choices about how you construct that spend. So again, the consumer holding in there, but I think very key to watching what unfolds in the rest of the year.
Okay. Esther George, thank you. Great to have you on.